It's time for the futures outlook. Crude oil hitting its highest level in more than a year. $60 a barrel within sight now. Let's bring in our traders, Bill Baruch, Brian Stutland. It's a hot topic for sure, Stutz. What do you think? Is it topping out or is it just getting started?
Well, I think we'll see here with oil, but let's look at the picture here on where oil might be going to. And there really has been this push into hard assets right now. You're talking about Bitcoin. Earlier in the show, you talked about canopy growth, hot stocks, short squeezes going on. Interest rates are low. Inflation is ticking up. We saw PCE numbers. They're starting to get pretty hot, Scott. And now they could push up to 2.5%, 3% year over year coming in here. So inflation is the key. We heard that from the Federal Reserve, Kaplan, saying, hey, watch out for inflation blips coming forward here. And so when you go into hard assets, oil could be one of those things. Now, oil has a couple things working against it versus some of the other hard assets. But, yeah, it looks like $60 is in the cards.
Yeah. What do you think, Bill?
Thanks, Judge. Oil has been in a downtrend since 2008. That's no secret. But last year, that was a capitulation defined by the volume. We've seen a huge tailwind higher. Now, I do think this inflation is showing up. We're going to see the policies in the White House also bring a tailwind. Right now, though, we are at some resistance. It's $60, so don't chase it. But I think there's a big downtrend since 2008 that we are about to break out above. And I think, too, you can look at this as being a pullback, as a buying opportunity. The backwardation in the contracts mean the farther out months are trading lower. Look at December's trading closer to $54. Wait for a pullback. You can position farther out in the curve, and you can then ride what could be a breakout to 7-year highs. We could see this thing go to $100 in the next 9 to 18 months.
Wow.
If it breaks out.
Wow. That'll have a big impact on a lot of stuff. Guys, thanks.